And so this is the thing: is that the transmission of money has now become weaponized, and this kind of thing that it's like, if you think about money, the properties of money, which, let's face it, very little of the volume is me moving paper notes around. It is really just electronic transfer between banks. And if you call this a medium of exchange, it's no longer a very good medium of exchange as a definition of money, because it's so hard to move money without it being stopped, locked, and so it's not a medium anymore. It's being blocked, and people don't understand that it's being blocked until they see there's issues. And I'm seeing businesses that have had to draw on like $250,000 of line of credit from the bank because the bank blocked an incoming payment for whatever reason. It's held for weeks, and like, so the friction is, it's impacting the economy. And I'm thinking of Jack Dorsey when he founded Square. He's talking about, now he was saying in his research that they found that as humans, we traded with each other before we actually talked to each other. And so he then looked at the internet and how the internet had really made talking to each other efficient, messaging across social media networks. He obviously had Twitter at that point. And he said, like, wow, we have really made that free and open and decentralized, and it's really impacted the world, really radically changed the world. Yet this intrinsic human behavior to trade is the worst. It's the pits. It's like, if I want to accept money, it's like ridiculous weeks. Like, look at what I did. It was
Mm.
like 4.5 months before I could accept money as a business properly. Our medium of exchange as money, which is one of the core intrinsic behaviors of our society, is being, like impeded, untold friction. And like, I mean, that is like, in a nutshell, I think why Dorsey is headlong into Bitcoin, because
Mm.
it's an opportunity to restore that normality to our species. And if you see what the internet did to the world, imagine what free flows of money. So, like entrepreneurs can interact with each other instantly. So, and we're getting a bit of that in crypto, because if you're going to like do this right, in my opinion, you have Bitcoin. You may not need to dabble in any of the altcoin, all that sort of stuff, but you can use stablecoins. Like, stablecoins are stablecoins. They can run on any network, and they will, right? So like, the network's like, do you want to build this in Python, JavaScript, or whatever the hell the platform is? That's all these platforms are. And it's the app that runs on it. And stablecoin is one of the apps. Like USDC runs on Solana, Tron, whatever, Ethereum, all sorts. And can run on, the Lightning Network if you want. And so the thing is, you can be Bitcoin only, but you can have a portfolio here of Bitcoin and stablecoin. And then secondly, you can generate yield, right? Your stablecoin can generate 10% or more yield from it, and you can actually put that into a DeFi network and get that kind of yield. And so you're now deeply inside the digital finance world, decentralized digital finance world, natively. And like, Maximus might call DeFi networks as like a Ponzi scheme. Well, there's lots of Ponzi being built on it, but there's some really cool shit you can do. You can put stable coins into these networks and generate yield, because people do want to borrow those coins so they can go long or short the market on margin. So, we're seeing the, essentially traditional finance slowly being built out on DeFi networks. I can trade on Uniswap. I can trade on all manner of dexes that are coming. Now, the next thing is margin, which is happening. And then they need to borrow so we can lend and we get yield. And then you can do derivatives. You can create insurance products. So there's a whole thing being built here. And it's already ready to be used. And you don't really need to be Bitcoin only and be exposed to that volatility. Like when you plan your life, you really want to plan it around what gives you energy and joy, because that gives you oomph to do the stuff in the world that you want to do. And if you've got this thing that's constantly, like I live quite an international life, and it's
Mm.
constantly this thorn in my side. I was like, how can I debank as much as I can so everything is easy and engaging? And so the thought is that actually crypto is actually at that point where I can use it. I can
Mm.
have my Bitcoin stash. I can put my cash, like I have a lot of cash, and the cash is that, if everything crashes, there's runway for years for the family.
Mm.
And it's like, okay, but I don't want it to be diluted. And then I was like, okay. And I sold just my main house in New Zealand. And, mainly because it was a pain, and it's a pain, the thorn on my side. Admin houses are a pain in the butt. Constant maintenance, constant issues, tenants, property management, tax compliance, all this sort of stuff. So it was taking too much of my time. So I sold the house. And I was like, well, there goes my safe haven thing, that if all shit happens, shit hits the fan, like, where do I put it? And I thought, well, it'll be cash. But in crypto, we have this cash and carry trade. And there's a very newly developing capital market. It's very inefficient. So you can actually put money into funds that run, basically miniature versions of Alameda. And they will generate for you, 30 to 60% per annum.
Wow.
Like, that is how inefficient the Bitcoin market is, and how much long demand there is for the volatility of this asset. You can sell the future, hedge yourself by holding the Bitcoin, and you can get an easy 20% over the course of a bull market per annum. But if you add to that all sorts of, smart models, and you can arbitrage funding, you can market make, you do all this sort of stuff, and it's, these funds don't lose money on, like, they might go zero, but they hardly ever deliver a negative week. And it's like, oh, 1% this week, 1% the next week. And so that's where I've started to look into, and started deploying capital into. It's like, that's the rainy day money. I can pull it out, within a month's notice. I'm generating 40 to, it's market dependent, 40% plus yields. And that's better than the capital gains I get from the house. It's just beating the monetary inflation, the money printing of the US dollar, which is around 30%. So I'm still winning against that. The house is not winning against that unless I've got a mortgage and leveraging it. The house might be going up 20% per year. Unless I've got borrowing half the value of the house, I'm losing ground on that. So, that's what I did. And that's a crypto world. That is all fluid, and no need to deal with banks.